This episode is brought to you by SmartVestor. Connect with an investing pro near you at RamseySolutions.com/SmartVestor. Today's question comes from Nikki in Idaho. What is a dividend stock? My coworker has 2 houses that are completely paid off by using dividend stocks to increase her income by several $1,000s per month and then reinvesting that income.
Bull.
This sounds too good to be true. Is it possible to do this?
That's a lie.
Is she trying to sell you a course on this?
Yeah.
I mean, you've got to, let's put it this way. A dividend stock versus a growth stock is just a company using their profit sharing to pay you a little bit instead of reinvesting that.
So if I own stock in Home Depot and Home Depot makes a profit, they have 2 options. One is reinvest it back into the company and grow Home Depot, and then the value of my stock might grow. Or they can pay the profits out in the form of dividends. A dividend stock is a company that is mature. It's not in a growth phase. It's in a mature phase, and they pay out all their profits. So it's an old, big dinosaur company like an Alcoa Aluminum. Okay?
Johnson & Johnson.
Johnson & Johnson, Procter & Gamble, okay? This type of thing. So dividend stocks do not have as good a rate of return as regular stock that's growing in a company.
You're basically pulling it out. It's not going to grow anymore.
Profit out. You're cashing in your chips at the end of the game.
You're saying I'd rather get the money now and not continue letting it grow.
And so you didn't, so for instance, if the stock market went up 20% in one year, that is like last year went up 25% in 25, okay? But there was not a dividend payout associated with that at all. Dividends had nothing to do with that. Dividends were companies made a profit in 2025 and they paid it out, or they didn't, to their stockholders. So point being, your coworker did not pay cash with the dividends off of a stock. So let me just give you an idea. If you had $100,000 invested and your dividend stock paid out 10%, that'd be $10,000, and that would be a huge,
usually it's like 3%.
Massive payout. So for them to get enough to buy 2 paid-for houses, they'd have to have millions of dollars in dividend stocks.
Which in that regard, it didn't happen from dividend stocks. It happened from investing over a long period of time.
They got the money somewhere else.
Yeah.
So dividend stock is a dumbed-down way to invest, a low-risk way to invest.
It's not a magic trick. It's just math.
But it's not even good math. I mean,
I'd rather have that money continue to grow.
I'm worth several $100 million. I'm 65. The number of stocks I have that are dividend stocks are precisely 0. I want a better rate of return than that.
I mean, we've heard you say on air for 30 years now, good growth stock mutual funds.
Yeah.
Not dividend stock.
Yeah, and the reason is the returns. It's pretty simple.
And those dividend income, that's taxable.
Okay, so let me reread it. What is a dividend stock? We just explained that. A coworker has 2 houses that are completely paid off by using dividend stocks to increase her income by several $1,000s per month. Okay, that did not happen.
And then she says, and then reinvesting that income.
Yeah, well, that's the income off of the houses.
Okay.
You got the 2 houses paid off by using dividend stocks. So my point is, if you did that, you either cashed in the stock or you have millions and millions of dollars to buy a $100,000 house or $200,000 house. So that's not, something's wrong. That doesn't pass the smell test, Nikki.
You're not going to follow her strategy and do this.
Yeah. So
at least in this
lifetime. It's still a good question. It's good to educate people on what a dividend stock is. That's why we took the question. And there's nothing wrong with dividend stocks, but it's just an ultra-conservative, lower rate of return way of messing with the stock market.
It just makes you feel good to get that little check in the mail every quarter.
Yeah. And it typically is done by folks that are retired, and they would place a chunk of money so that they could get a steady income off of these steady income companies. But again, it's a reduced rate of return.
And it takes a big bankroll to make some serious
money. In order to
money
pay off 2 houses, there's something, we got a chicken egg problem with this thing, with this story. So this is somebody that read something on TikTok and then lied to you.